Hello and welcome to the podcast Invest in You. Today we have got a great guest here. Let's see where all the devices just disappeared here. Looks like the recording is in process. Yeah, strange. Okay. So today we've got Adam Coffey with us from the USA. I'm right now in Pakistan, and that's on the other side of the world pretty much. So evening for me, morning for you. Welcome to Invest in You, Adam.
It's good to be here. Hello to all your listeners out there. I'm excited to be here.
Perfect. Yeah, no, I've seen your work for a couple of years. I really like it, and you bring so much knowledge to what you do, which is buying and selling companies, and also helping other people to do that as well. So how did you end up in this space? I know the backstory, but the short version, why are you working and why do you like acquisitions, Adam?
So I think life is a set of experiences. Early version 1.0 Adam was a veteran U.S. Army military, taught me about discipline, teamwork, leadership. Adam 2.0 was an engineer. Engineers are meticulous planners. I'm a
All right.
pilot. Pilots don't take off unless we know where we're going and we deconstruct the trip, and we're very meticulous about the planning. I worked at GE for 10 years during the Jack Welch era. It was the heyday of
Yes.
GE. They were number one on the Fortune 500 list. Tech didn't exist. The company's growing so fast, it's doubling in size, every 3 years. And so I learned how to run a business. Adam 3.0 learned how to run a business, at GE. And then I spent 21 years, Adam 4.0, as a CEO, building, running three large companies for nine different private equity firms. I'm a
Yes.
turnaround guy, so they all started rough as a
Yes.
turnaround, something that needed to be fixed. And then I'm a buy and build guy. So once it's fixed, now I want to scale quickly. And so I bought 58 companies, put them together, and then multiple exits. I had $2.5 billion in exits as a CEO.
Yes.
And then I just really got bored after doing that for decades. Adam 5.0 is a best-selling author. I've got four number one best-selling books out there, but I hung up my CEO cleats, about
Yes.
3 years ago, and I said, I want to do something different. So I just turned 60. I'm going to spend the last 10 years of my career trying to help as many entrepreneurs out there succeed as is possible. That's my way of giving back, call it. And so that's my focus. Try to help other entrepreneurs beat the odds, help them succeed, either through my books or teaching seminars, talking on podcasts. But that's my real focus. And I'm
Yeah.
having a lot of fun. And
Got
I
it.
work more hours today than I ever did as a CEO, which I didn't think was possible.
Yeah, I'd like to say thank you for your service in double meaning for the military and plus also what you have got for the next decade ahead. And the cool thing by helping others, for some strange reason, you also get deal from that. And you can
I
choose
do.
who to put the money with as well that you like of all your apprentices. So yeah, well done.
Yeah, it's scary actually. I did my taxes recently and I had 52 K1s, which is
Yes,
a partnership
I know.
tax return, and it's like, boy, that was a lot. you
Yeah,
know.
yeah, no, I've trimmed down big time because of some nice business partner who ran off with 1 million plus. So I've sold off a couple of companies on the contrary. So I very much look forward to the next stage of start acquiring businesses again. So building a pipeline while I'm helping out for the greater good in
Sure.
nature. So yeah. Okay, so you've written a couple of books. How does it feel like to write a book? I've written two. I've published one. What was
Yeah.
your learning?
Well, I'll be honest with you. Each book is different. Each book, as so I've written four, and so I feel like I'm getting better
Yes.
now. And so, but it's my first book. I got lucky. Most business people write a book, and those books are never really commercially successful, and
Yes.
they're written to kind of add expertise, to a person's background, and something to leverage, in other ways to help drive growth in business. But in my case, my books have been commercially successful. I generate six-figure royalties every year from my
Yeah.
books, and I do donate it to charity. So I use it to fuel my philanthropic work. But if
Yes.
I talk to clients, I work with 71 entrepreneur-led companies right now, and I work with about a dozen different PE firms. And if I ask any client, how did you hear about me? Hey, I heard you in a podcast. I read your books. And so
Great.
millions of dollars, in revenue that's produced, from relationships that came from those books. But, I do have to say that commercially, my books have been successful. I have a following all over the world now, and I have clients on every continent, which has been great. And so for me, it's like I originally thought I was writing books to kind of, build the expertise,
Yes.
but commercially they do well in their own right. So I guess I'm actually a successful author, as
Yes.
an Adam 5.0, as well, which has been fun. And so I do my best to put out one book every other year, so that's my cadence. One book
Excellent.
every 2 years, take a year off in between.
We got another four in over the next
Yes,
few years. Good.
yes.
Good. I
Yeah,
like
that's
that.
the plan. Have a whole series,
Yes.
out
But
there.
I know many authors, and I know many repeat authors as well, and some of them really get the bug. So I know a couple of people who published 20 plus books, but it doesn't.
Early as a kid, I was a big reader, voracious reader, and
Very good.
one of my early loves was I wanted to be an author. I was going to write fiction, and it was going to be historical fiction like John Jakes, or mysteries like Dean Koontz, or it was going to be horror like Stephen King, or Tom Clancy, spy thrillers and Cold War stuff. It's like I really did want to be a writer when I was young, but I guess I didn't want to starve to death. So
Yeah.
life took me in a different path, and I
Yeah.
circled back as a wealthy man to the writing later on in life.
Yes.
But I'm still wondering whether there's a book of fiction out there for me.
Yes, no, that's good. I started to write one because of my strange back with intelligence, and I could just put like true stories to a fictional character, and it's
Yes.
too unrealistic, so I can actually use the reality, and really funny.
Yeah.
Uh,
Yeah. Well, that's the kind of Tom Clancy's model
yeah,
is,
exactly, exactly. Yeah.
hang out with people like you and get great stories and turn them
Yeah,
into books.
yeah, yeah, yeah.
Yeah.
No, I'm sure I will get some new stories here now, living in India and Pakistan for a year. That's the plan.
There you go.
Right. So you did some time with the military. I like that, and I do actually have a uniform here on daytime at the moment. So what did you do? Tell us some of the learnings from the military that you brought with you into the.
Yeah, so I worked on classified air defense
Yep.
radar systems, forward area. So forward area deployed meant they were airdroppable.
Right.
And, call me, a very fancy electronics repair. I was the cable TV repairman,
Yeah.
who was delivered by airplane and helicopter to forward areas, with an M16 and a toolbox,
Yes.
so and then I just hang out on the ground for the rest of the division to catch up to me and pick me back up, and then redeploy if necessary.
Repeat. Repeat.
Yeah, so but classified air defense radar systems, kind of short range to detect low flying aircraft trying to come underneath, higher, or longer range radar systems,
Right.
early detection.
Right. I got it. Okay. So jumping back to business a bit, you have learned a lot over a number of years working with PE funds and so on. I like to jump more into the later years where you start to do things more for yourself, because I think most of the audience is in that space, the entrepreneur to acquisition space. And let's take some of the key things out of your books or from reality. What would you leave the audience with? Some which actually actionable. So anything you
Yeah.
do.
So and as part of doing research and writing my books, and I was also teaching at university in executive MBA programs, and I was doing research, and I just noticed how hard it is for small business owners to find success. And some statistics here in the U.S., there's 34 million small businesses, but only 7% of people ever get to $1 million in revenue. And of those 7% that get to 1 million, only 40% are profitable. and a third are losing money, and a third are break even, and 40% are profitable. And I thought, why is it so hard to be successful? I'm a guy who's building companies with hundreds of millions in revenue. I've got billions in exits,
Yes.
and I'm thinking, why can't people get it right? And so I started really focusing on small business and started focusing on taking the tools that I had learned from, larger company, Wall Street, private equity type experience, and translating it down to, helping smaller companies find initial success and then learn how to scale faster. And so, for people listening out there, a lot of us are already in an industry. And I can't change the industry that you're in for whatever reason you're there and you've been in it for a long time. But there's also people out there who are listening who are thinking, I'm thinking about starting a business,
Yes.
or I'm a Fortune 500, middle market, I'm working in a company, I'm middle management, and I want to kind of do my own thing. And so I started looking at what is the pathway that has a higher probability of success. And so I started scripting it out. And it started with things like needs-based businesses versus wants. I'm going out Friday night for dinner. I want a new sport coat. I don't need a new sport coat. I got a closet full of them. So if the economy is tough or I'm unemployed, I'm not buying a new sport coat. I just go to my closet. That's a want-based business. And
And
so wants-based businesses are very cyclical. If the economy is going south, so does the revenue in a wants-based business. I want a needs-based business. I'm sitting in my office here at home. If it starts raining and it's falling on my head and I'm indoors, I need my roof fixed. It's not discretionary. It's got to get fixed, right? So that's needs versus wants. And then I think about project-based versus recurring revenue.
I like
You
that.
know, if I have a pest control company, that comes and services me, they bill my credit card every month and they come once a quarter and spray the perimeter of the house. It's needs and it's regular recurring contracted revenue. If I wanted that roof fixed, if I'm a roofing company, I can make money anywhere. Don't ever forget that. But I want to stack the deck in my favor. So a roofing company does my roof this month. Next month they have zero revenue. Now they got to go find a new me that needs a roof because I'm only going to buy one every 15, 20 years. And so it's like they have very lumpy revenue and it's project based, and it's like I got to find a new customer this month to replace the one I had last month. Whereas that pest control company, every month, it's like they can sign new customers that are on top of the old customers. And because it's a contracted revenue stream,
Yes.
it's very stable. So needs better than wants, contract better than project. Now
Yep.
I want low capital expenditure versus high capital expenditure. So if I start a manufacturing business and I have to buy a bunch of machinery, that's expensive, and it takes money to service the loans to buy that. If I'm a pest control company, hey, I just got to buy a truck and a sprayer, and I'm in business. And if I'm an accounting firm, my product's actually in my head. All I need is a desktop computer, and so I want low capital expenditure because I want high free cash flow. I
Yes, I got
want
it.
my company to be an ATM machine. And so, there is a profile for what has a higher probability of doing better in a bad economy, generating more cash, has lower expense, needs, it's like, and so there is a formula to success, knowing and recognizing fully that any entrepreneur in any business at any time can make money, but some industries are better than others.
Yeah, no, I like that. And the funny thing is, when you start to look for people's buy box, the criteria for whatever they're gonna shop for, it starts to look quite similar. But then when it comes to actually sourcing and finding those, and then when it comes to back to like old school sales skills, like don't be afraid of the telephone. You need to do a lot more outreach than you ever thought would be possible. And
And I think about those
so
kinds of decisions as time versus money. Do
yes,
I have time or do I have money?
yeah,
Because if
exactly.
I have money, I can't
Yeah,
buy time. So if
no,
I have
exactly.
money, I could
Accelerated.
hire
Yes.
a buy side advisor to hunt for me and
Yep.
to bring me warm, qualified leads of companies that are the right size in the right industry that meet my buy box
Yes.
criteria for certain customer verticals and what have you. And so I can outsource that if I have money and no time. But if I don't have the money, well, then I must make the time to do all of
Yes,
this
indeed.
myself. And as you said, I can't be shy. I need to learn how to do outreach and call people and, and show up and email and, social media. It's like I've got to be a salesperson.
Yeah.
Absolutely.
Same with actually, most people are procrastinating about this area. I've known people who've been doing this for, yeah, probably like 2014. Met the first guys who did like on a serious scale, but at that time was working in real estate.
Yeah, it's interesting too because right now is a great time
It
for
is.
people to be out there doing this. I call it the largest wealth transfer in human history. I'm a
Yeah.
baby boomer. I was born in 1964, so I'm the last year of the baby boomers. And boomers at the youngest are 60, and I think the baby boomer generation goes up to age 74. I think it's a 14-year period. And so we, the business owners of the baby boomer generation, are all going to retire over the next 5, to 10 years.
And you own too much.
And we're gonna sell our companies. And so, we got to sell them to somebody. There's a
Yes.
50% chance that private equity will be the buyer, but that also means there's a 50% chance that it won't be private equity. And so now is a great time, especially for the younger generations out there, to say, hey, I don't want to slog through a career of mediocrity working for someone else. I want to generate wealth. I want to generate, wealth for my family, for future generations. I want more than just that job working for somebody else. Business ownership is really the key to building wealth. There are very few very uber wealthy people out there in the world who got there through W-2 employee, working for somebody else and getting a
You're right.
paycheck.
You're right.
Business ownership is the key to wealth creation, always has been, and as a result, and normally successful people in business who then generate additional cash, they become real estate investors, and so I mean it's like there's
Yes.
these ecosystems out there. But if we want to be wealthy, we need to think about being a business owner. There's risk in everything we do. There's
Of
risk if
course.
we're an employee that someone's going to lay us off, and there's risk in being a business owner that will botch the job and will go bankrupt. The question is, which risk do I want and which reward profile do I want?
Yes.
But there's risk everywhere. But I think being a business owner, that's the key to wealth generation, in life. And right now, the biggest generation of business owners ever is clocking out. And there's great opportunities for people to be buying businesses rather than a startup. If I start a
Yes.
business,
Exactly. Yes.
very high probability of failure. Very high probability. 65% of all businesses that start are out of business within 5 years. And a lot of time wasted, a lot of money wasted, debt. It's like it's risky. But if I buy a pre-existing business, it has a history of revenue, a track record of earnings. It's got a customer base that's been satisfying for some period of time. And so I eliminate all of the startup risk. I have a little bit of transition risk. Can I continue to serve the customers and
Yes.
delight the customers and have the same level of success that the former owner did? But I can do a handoff, and I can try to solicit the help of that
Yes.
person who's leaving the business if I'm going into it. And so there's ways to mitigate risk, but I can eliminate all the startup risk by buying a company that's already out there.
Yeah, so my first interest into entrepreneurship was beyond running things myself was around venture capital. So already 2006, I was in that space, advising, helping companies, and just looking back on my own record, the companies I helped them to really grow towards like the Series A, but none of them have become a unicorn yet.
Yeah. Well,
And
I don't want to speak.
one has failed. So yeah, it's really not a numbers game if you play that.
I don't want to speak negatively about venture capital in general, but I'm what's called a buyout fund guy, which is the
Yes,
largest segment of private equity. And we
makes
only
sense.
buy
Yeah.
mature companies in mature industries that have a history of and track record of earnings and revenue and earnings because we don't want the startup risk because so many startups do fail. When I look at a prospectus for VC funds, Typically, I don't see things that even beat the S&P 500. So it's rare to be successful in venture capital. There's obviously a place for it, but it's not for everyone. And so I want listeners to succeed, and I want to stack the deck in their favor. And that's
And
why I like buying existing businesses.
even the same thing, if you look on any of the stock markets, most of them don't have any earnings to distribute.
Yes.
Not just
Yes.
observation, like would you like to have a company that actually gives you cash flow every year,
Yes. And so if you're
or,
in a
or
startup,
one that
what can you
doesn't?
expect? You can expect long hours, low pay, marginal benefits or perks of being there because they just don't have the revenue and the earnings to do that. And again, it's like you can be successful anywhere, and there's people out there who do startups and they're quite successful.
Indeed.
But I like pre-existing businesses because they've already proven that they can be successful.
Yeah, there's a very old saying that if you got the right deal, the money will follow. But many people in this space, and actually one of my specialties is actually to find the money, very sought after skill. Why don't people dare to ask for money? They got the deal, everything is fine, but then it's the same as like the pipeline of potential investors. People kind of forget that, and then the deal slips away. Lessons learned around that space?
Well, just time kills all deals, first
Yes.
of all. So I'll just say that the longer it takes us to get financing or to deal with those, to deal with diligence and contracts and getting it done, time kills all deals. But aside from that, I think also a lot of entrepreneurs are they're already worried about how much of the business they don't own yet and how much of the future earnings they might get, how much they have to give away to get the capital. And so
Yes.
we think about capital incorrectly. If we do not have capital and you're approaching someone that does, you better be generous with
Yeah.
what your ask is, because I can invest anywhere. Why would I choose you? You're telling me, well, your wallet, Adam, plus my idea equals fabulous success. Well, I'm already fabulously successful, so I don't need your idea. I need better return,
Yes.
if you want to get my attention. So I tell people who are trying to raise capital, what you really need to focus on is, hey, what's the typical profile that a lender or an angel investor, or a private equity, what are these, or mezzanine debts, like, what are they looking for?
Yes.
They have capital that they're going to deploy, and they're looking for the best deals to invest in. And so you need to convince them that your deal is stable. It's going to produce the required results. So I need to put time up front into my thesis. Thesis-based investing. This is what I'm investing. This is why I'm investing. This
Yes.
is why I chose this industry. Here's the company that meets that profile. Here's my experience and how it relates to this industry. What I need is the capital to get this deal done. And then you have to say, okay, if you convince me that it's a good deal and you convince me that you might be a person who knows what they're doing, in making this investment, now you have to delight me with the return. So if the market rate, if a mezzanine lender is charging 12%, then you better give me 15, 20, and you better give me 5% ownership. It's like, people are so concerned about giving away wealth they don't have that they don't get the financing they need to get the deal done. It's like, you
Yes.
need to,
Yes.
if it's your first deal and you don't have capital and you don't have a pot to piss in, then you better darn well make sure that you make it so attractive to the investor that they want to say yes.
Yeah,
That's
absolutely.
I think that's the easiest lesson learned is, don't be stingy with capital or earnings that you don't have. you
Yes.
know
No, that's
and
right.
and don't have arrogance around thinking that what you have is proprietary, or
Yes.
is special, because it's not. And so if I've got 100 deals to look at, why would I choose yours? Mr. or Mrs. person who's never built a business, who's never run a business, who's never bought a business, you want
Yes.
funding? That's risk. And so I better get great return. So I love thinking about it as, I'd rather own a smaller percentage of a truck filled with watermelons than owning 100% of one watermelon, or even worse, not
Yes.
not having the money to buy the one watermelon. It's like, so
Yeah.
be generous. If you're generous with equity and with interest, you can get your deal funded. And once you get a deal or two under your belt and you're successful,
Yes.
well, now you need less capital, or you can self-fund, or you have a track record, and now you don't have to be as generous.
Yeah, same with seller finance. How often do you find that to be useful and applicable? I mean, you're on the
Oh, in every
case.
deal I do, there's some element. So I think of it three ways.
Yes.
First, there's rollover equity. So I'm buying a company from a
Yeah, I got it.
person. They could retain a percentage of the business, which means I'm buying 100% of their business with a new co,
Yes.
and I can give them some stock in the new co to pay for the old co, and they retain a piece of the ownership, and now they're going to get a second payday down the road.
Yeah,
Why
I
would I
like that.
use why would I use rollover? I would use rollover when I don't have enough equity, or I'm worried about risk of losing the revenue that they've generated and their relationships, and I want to put handcuffs on them
Indeed.
and get them tied to helping me maintain the customers. So I'm either using rollover to eliminate risk of losing revenue, or I'm using rollover because I don't have equity and I need their equity to look like my equity.
Yes.
And so now Newco needs funding, and it's got 10% equity in the deal because the former owner rolled over 10%. And so it looks like 10% equity is in the deal. So that's the first tranche. The
Yes.
second tranche then is seller financing. And so on most of the deals that I'm involved in today, there'd be 20, anywhere from 20, 25% seller financing would be typical. So if I'm
Helpful.
buying a business from a retiring baby boomer who's 70, and their business is small, and so the payday they're getting is not large enough to like really excite them, and they're a little nervous about retirement. Well, how about if I reduce the cash you get at close? It's still a good size amount of cash, but now I let you clip a coupon, and I
Indeed.
pay you 10% interest on 25% of the sale. So you're getting a lump sum up front, you're clipping a coupon, and then when I pay the debt off on the backside, when I sell it, you get another payday. And if I include then rollover equity on top of that, you're also going to get another payday there. Now I'm giving them one, two, three paydays plus
Yes.
clipping coupons. And so it starts to get intriguing to the seller to say, hey, maybe I don't want all cash up front. Maybe I would like to get some of these additional paydays. I'm 70. This gives me an income stream till 80.
Yeah,
So
exactly.
I like that. But now, I've got, let's say I did 10% rollover and I did 25% seller financing. Maybe I put that note on full standby, or I'm not servicing that note for 5 years. And so they're going to get a lump sum. I'm going to have to refinance it out in 5 years, or I'm going to sell the company and
Yep.
use my equity return to pay that out. It's debt. But now to a lender, it looks like I've got 35% equity in the deal. Now I put in a little bit of cash. Um, and that in totality has now set me up to get approved for the commercial loan,
Yeah,
or here in the
exactly.
United States, the Small Business Administration
Yes,
backed
please.
loan.
Yes, please.
And so now I've got enough equity in the deal. Something else I'll tell you, if you're here in the US, is not all Small Business Administration lenders who lend under that program are created equal. If I go into a
Yes.
large bank will say, I don't care how much, equity it looks like you have. I still want you to come out 25% cash based on enterprise value. But I've got other tertiary lenders or secondary lenders who would say, hey, under the SBA program, I'm looking at debt service coverage ratio.
Exactly.
And with this seller, rolling over, and this debt that you don't have to service, you've got so
Totally.
much equity. Just give me something, write me a small check, and I'll approve it because I'm comfortable that the business has enough cash flow to service the loan I'm going to give you. So
Yeah.
not all lenders are created equal. They all have different underwriting requirements, even though they're lending under the same types of programs. And so there's a lot of flexibility. And I think for most entrepreneurs out there, you think your problem is you don't have money, but that's because you don't understand finance.
Yeah.
And so
Yes,
the
I
more
agree.
you learn, and you learn the components of a deal, helps you structure a deal to where, if you still need equity, well, then you got to go find it, and you better treat it well. And so I've got all these different options to kind of put the deal together. And I tell most people, probably best if you put some thought into where this capital is going to come from and how you're going to structure a deal before you even start hunting, so that, again, time kills deals. when you finally find that great company and you finally get somebody to agree to your price and your methodology, you don't want to then spend 6 months trying to figure out where all these components are going to come from.
Yeah, no, I got it. So you just showed like the surface level of knowledge. There's a lot more under the surface. So I've followed you for quite some time, and quite recently you teamed up with JT Fox, and you have some ideas how to leverage each other's knowledge and skills and so on. So uh, another podcast you might want to just dive deeper into what Adam has just shared is Millions to Billions. It's all free out there, and I can highly recommend many of the books that Adam has written because they're almost like a blueprint. Depending on what stage you are, and they are used in business schools and PE funds, so it's not joke. I read all of them. How can people find and follow your work, and what else are you up to at the moment?
Well, so seminar coming up in May in Dallas, Texas. It's May 3rd and 4th. I'm doing a seminar in Sydney, Australia, August 4th and 5th. People can reach out to me on LinkedIn. They can engage with me on LinkedIn. I do respond to everybody. There's different websites out there. There's Adam E. Coffey is my personal website, as an author. I have something called the Chairman Group, chairmangroup.us. That's a website for my coaching, coaching and mentoring business. And then for JT and I in the seminars,
Yep.
I can give you the link and we can put it in
Exactly.
the comments as well. But I'm having fun. I think that was the kind of the ultimate goal was I wanted to help people. Yes, I generate returns and earnings and cash flow and all that. I said if I was a homeless guy, I'd hold up a cardboard sign that says I work for jet fuel.
Yep.
I want to help. I truly want to help people find a path to success.
Yep.
Business is hard. There's risk in everything that we do. And so learning from people who've already been there and kind of walked that road certainly makes the journey more helpful. And this generation of people, of entrepreneurs, is so much more open to learning from others, from coaching. Boy, there's nothing we don't do if we don't know how to do it around the house that we can't go on YouTube and find a video. And so the same
Exactly.
holds
They
true.
figure things
Same
out.
holds true for business, right? So, but I don't have a team of people inside social media. I'm most active on LinkedIn because that's where, almost 1 billion business people are. I'm also on Instagram. I'm on Twitter, just not with as big a presence on those two platforms. Mostly for me, it's LinkedIn. But website, reach out to me on LinkedIn. You're going to get me.
Absolutely. Invest in You is a podcast name. 15 seconds. What does invest in you mean to you?
Invest in me means in life there are dreamers, there are doers. And people who dream but never commit, never take action, never take a risk, they're not going to get anywhere. You want to get up, you want to be a doer. Investing in yourself means investing in reading books, in learning from others, in taking calculated risks in order to get ahead. That's what invest in me, means to me.
All right. That's a wrap. I'll follow up with you later. Thanks a million, Adam, for joining us.
Good to see you and good luck to all your listeners.
Cheers. Thanks so much. Bye bye for now.